Good afternoon, ladies and gentlemen, and thank you for participating and attending this session, 10 Things to Know When Filing Taxes. This thought leadership presentation will be conducted by two thought leaders, definitely when it comes to taxes, Dr. Alice Shiotsugu and Mr. Jeff Neumeister. Dr. Shiotsugu is a veteran educator and tax professional, and she joined Woodbury University's accounting department in the fall of 2018. She's also a certified public accountant, and she has served for 21 years with the Internal Revenue Service, IRS. She worked there in a variety of roles, including Internal Revenue Agent, Internal Revenue Agent Supervisor, and Programs Manager. But she's also very instrumental in our VITA program, the Volunteer Income Tax Assistance Program, which is currently ongoing. She's also the owner of Frishta Amala CPA and Tax Services in San Pedro, where she has dealt with U.S. and foreign tax issues before a variety of governments, developed special expertise in expatriated assets, banking, international compliance, and tax treaty accords, among others. She holds a doctorate in public administration with concentration in taxation, and of course also an MBA and a Bachelor's of Science. Jeff Neumeister has over 15 years of accounting experience, with most of that in the forensic accounting field. As a California licensed certified public accountant, yes, he's also a CPA, among many other things. Jeff Neumeister has applied his many master's degrees. It lists here 3, but I think by now it's more than that. And his degrees are in, among others, management, accounting, and criminal justice. He has applied all of them to forensic accounting and consulting services. In addition, he is a certified fraud examiner, CFA, he is certified in financial forensics, CFF, a certified information technology professional, CITP, and many more abbreviations and, of course, skills. His firm, Neumeister and Associates Incorporated, provides tax, accounting, advisory, forensic, and strategic consulting services. Jeff Neumeister has spent most of his career specializing in forensic accounting. He has provided support in litigation cases involving partnership disputes, fraud, income support calculations, lost earnings, family law, and other matters. He has served as a technical reviewer for continuing professional education courses offered through the California Society of Certified Public Accountants, and he has taught in undergraduate and graduate accounting courses, among others, at Woodbury University. Ladies and gentlemen, now without further ado, I am handing over the reins to Dr. Alice Shiotsugu and Mr. Jeff Neumeister.
Awesome. Thank you very much for the introduction. I first share the screen. If you have any trouble seeing what should be there, just let us know or send something in the chat box so we're aware. To kick us off, I'm going to share, it's the roadmap, right, Alice?
Yes. Yeah. Yes.
Here we go. Can you see that okay?
Yes. So I will be speaking about this roadmap, and this comes from the Tax Advocate Office for the Internal Revenue Service, one of the functions that help taxpayers with severe problems, tax problems. So we won't be able to explain to you everything that is in this roadmap, but for every citizen, this is one of the most comprehensive roadmaps that you can follow if you have a problem, or if you ever have a problem with Internal Revenue Service taxation. So the one thing that I want to just very quickly show you, this maze of, mainly these are rules that we have to follow as taxpayers. So Jeff, can you go a little bit up? Yeah, right there. So we can increase this map, but then I won't be able to see you know, what I want to show you, the only little pieces I want to show you. So to the left, I don't know if take to, yeah, right there, taxpayers.
Alice, you fell on mute.
Okay, now?
Oh, there we go.
Going on. So the taxpayers starts here, like in April 15 is the last day, potentially, unless you file an extension, to file your returns. And so the taxpayer starts here, begins filing process, and believe it or not, people still are filing paper returns. So very quickly, I'm going to show you. As I said before, I cannot elaborate too much on this map. But if you want a copy of this, we can send the link, or we can send it to you. Just email us and let us know. You have our information at the end. Stay there a little bit, Jeff. So tax return preparation. Can you increase this a little bit more, Jeff? Just a little bit more to the left. Yeah, right there. I don't know if you guys can see everything here, but when you file the tax return, eventually the tax return, if you're filing electronically, you will see that eventually you're gonna end at the processing station to your right. Can you click in there, Jeff? You're right here to the right, processing station. So once you file this return, what we are going to discuss today in this webinar are some of the steps that are presented in this roadmap, which we cannot elaborate again, just to reiterate the point. So at the processing station, when the returns get there, the filters, if there were any errors, it's already taken care of when the tax return is first entered into the software. The input is entered to file the return. Then from the processing station, the return moves to the processing station is actually, it's called a campus, is a filing center, and it has moved everywhere in the nation. So it used to be that everything was in Fresno, they moved to Philadelphia and so on. So, but once your return is filed, then it moves to different sections. We go to the right, Jeff, a little bit, tax return processing. So at this point here, your return is looked over, and we're going to explain to you how this happens to see if there were any substantial errors, and if the return needs to be sent back to the taxpayer, a letter needs to be sent. Move back, move to the, go to the tab, Jeff, a little bit, go to the tab, up. Sorry, down, I think is what I mean. I'm so sorry, down. Yeah, so once the return has crossed out those steps, then it gets to the assessment station. That is if you owe taxes or if there is a refund. And here is where actually the return is looked at to see if there's any hanky-panky going on. Move to your right, Jeff, to the exam part. And you gotta go a little bit up to, yeah. So the screening, the station here is where a lot of the people like me, I used to be, my last title at the Internal Revenue Service was program manager. And by the time you get there, it's one grade below the top level other than the ones that are appointed. So I was a grade 14, and they sent us to the campuses where the returns end up to pick up those returns that need to be audited. And then they come to the functions, exam, and sometimes they go directly to fraud, depending on what it is, criminal investigation. And we select which returns are going to be audited. So if the taxpayer is lucky to get the return pulled for audit, then a letter is going to go to the taxpayer. Never, 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 especially now, the IRS is going to call you and say, you know, give us some money or file the return with us, or you owe tax, and the police is coming to get you. These are things that just have gotten out of hand. The IRS would never do that. Those are scamming things that happen. So I want to reiterate that the IRS will never give you a call of that nature and make you scared. They're going to send you a letter and they hope that you respond to that letter. So go down. Yeah, now you understand. Yeah, to the left, a little bit more to the left. So the returns get audited, get pulled for exam. They now I'm jumping hoops here. They get sent to the local units and assigned this case for audits. And once the auditor has finished with the audit, the taxpayer can go ahead and accept the results. Sometimes it results in no change. It's called no change, meaning that they review, they talk to you and everything.
How do you
and
know?
I'm sorry? Is there?
Oh, really?
No, please mute.
Please mute yourself.
We have somebody who is unmuted. Please, everybody mute. Okay, go ahead.
But if the taxpayer doesn't agree to the results, if there is tax liability, usually that's the case. Move down, Jeff, please. The taxpayer can agree and pay the tax or disagree in writing. It's called a protest letter. And then we jump hoops all over again to end up in appeals. And once the return goes to appeals, the taxpayer can actually negotiate with appeals before getting shut off and saying, I want to go to court. There's a lot of stuff happening in this map here. I just want to introduce you. And for every little thing that the taxpayer thinks is going to be easy to solve, believe me, it takes a long time, unless it's something very simple like, you know, you did not report the interest or mortgage or something, and the taxpayer knows for sure that that's exactly what happened. Otherwise, this can take days, months, years to fix. So taxpayers advocate put this map so that the taxpayer can see that what the system does, and many taxpayers blame the Internal Revenue Service. A lot of these rules are actually Congress who wrote these rules. This is just a picture presentation of what those rules are. So I want you to, I want to pitch a little bit here for the IRS. Nowadays, there's a lot of talk about, you know, getting rid of the IRS, this and the other. These people, not because I was there, guys. I'm in the outside and now I'm doing the job to help taxpayers. But regardless, the employees of the Internal Revenue Service have a tremendous job to collect the money for the government that is going to help this country to be the best it can be. And so we really need to be a little bit kinder to the employees, and also as taxpayers realize that the reason why we pay taxes, no more, no less, fair amount of tax, is so that we can have this beautiful country of ours. So with that, I will definitely share this map with anybody who wants it. And again, just to repeat, you want to get involved with the IRS, it's almost like marrying the Internal Revenue Service and getting upset and divorcing the Internal Revenue Service when your case is settled. So now, Jeff, it's your turn.
Thank you. Thank you very much, Alice. I'm going to zoom back out real quick. And unless you're an avid fan of flowcharts or tax, chances are when you see something like this, your eyes are going to glaze over, right? By a rhetorical raise of hands, how many of you are excited about this and like, oh, wow, I love all this detail? No, I already know the answer. I have thousands of clients and 99% of them have no interest whatsoever. And it's understandable because look, and this doesn't even get into the details, like within each one of these little boxes, arguably there could be several sub-steps or elements or processes in place. So it gets extremely convoluted and very, very involved. The point of the presentation today is to provide you some high-level takeaways, provide a few insights, as Alice noted, about some of the minute steps in this process, and just some things to keep in mind as you work in preparing your own taxes or work with your accountant to prepare your taxes. The first one, this is a quick, just kind of agenda list of the 10 things we're going to go over, but jumping right into the first one here. Oops, here we go. Is be mindful of the due dates. So most of us think of, when you think of taxes, you usually think of your personal taxes, and that's usually going to be April 15th. April 15th has been synonymous with the term tax day. No, it's not always April 15th. You know, case in point this year. This year it's April 18th, just because of the way the dates fell. Or if you reside in certain counties here in the state of California or some other states, like I think Georgia, your deadline is actually extended out until the fall. Or if you elect to file an extension, your due date for filing would be, for your personal return, would be October 15th. Sometimes it's October 16th or 17th. Just be mindful what the due date is for the year in question. And also, before I continue on the due dates here, keep in mind that the due date for filing, reporting your taxes, is not necessarily the same as when the taxes are owed. For any taxes for year 2022, whether you file an extension or not, they're still due by the proverbial April 15th, or this year, April 18th. Right? Filing an extension to report your taxes does not give an extension for paying the taxes. Two very different concepts. And it's been a bit of a sore spot for the ill-informed. A lot of our clients, when they filing for an extension for the first time, they're under the notion that they're essentially getting 6 extra months of reprieve to come up with the cash to pay their tax obligations. No. Still have to pay by the original due date. On W-2s, so if you're an employer, right, you have employees, keep in mind that those have to be issued by January 31st for the prior calendar year. We're well past that date. January 31st does not necessarily mean work on processing them on January 31st, and then they don't actually go out until a day later or a few days later. They need to go out by that point in time. I've actually had a case today. A taxpayer reached out to me because her employer failed to give her a W-2 for last year. So there's a form one could file, or could reach out to the IRS to request for a substitute W-2, and for the IRS to essentially put some pressure on the employer to issue a W-2. In absence of a W-2, there's some other workarounds one could work with, like using the last pay stub. But if you, again, any questions following this presentation, you can reach out to Alice or myself. 1099s. So usually 1099s are synonymous with independent contractors, right? So most people are, either you're employed and you receive W-2, or you're working independently as a contractor or freelancer, and you might get 1099s. And those are also supposed to be received by the January 31st. There's different kinds of 1099s, which I'm not going to get into all of them, but normally think of the non-employee compensation or 1099-ness. And back to you, Alice.
Okay, so as I said, once you file your return, the computer, the software at Internal Revenue Servers actually looks or reviews these tax returns, and the review has to do with changes. If there are any major changes, then the computer will spit out the return. But there are some things that are actually automatic for the IRS. For instance, when there is a summons, I don't know, I'm pretty sure many of you in this room knows about what is going on with Donald Trump and his tax returns. Issuing summonses will show that there are some related transactions that perhaps needs to be looked at or reviewed. Or in the case of credit cards, the taxpayers using credit cards to pay for bills in the United States and their accounts here in the Bahamas, in one of those tax haven countries, the IRS will get those credit card statements and see that the cash is outside and they are using these credit cards to pay bills here. How do they get this? They summons the banks. I had, as Jeff, we are practitioners. We have our own CPA and tax services. We get clients often. I did have a client yesterday, and he says to me, Alice, isn't that illegal that the IRS is summons at the bank because I had $300,000 that I sent to some country. I'm not going to mention the country, but and I said, why did you send that money there? Because I was told that I don't have to pay taxes in the US if I do that. So they're listening to the wrong people. You don't do that. It's not illegal to send money. It's the intention. It's going to get you in trouble. The other thing that they do is they match reports. For instance, if you have a partnership, you have two people in the partnership. The partnerships can be huge, thousands of people in a partnership, but let's say there are two. One files the return, the other doesn't. So the IRS matches the partnership return and look at this taxpayer not filing returns. So that's one way taxpayers selecting returns for audit. In addition to the computer speeding these returns, these are ways in which tax returns are audited. So just because you're not filing, it doesn't mean you are incognito. The fact is that somewhere, someplace in the Internal Revenue Service, your data is, even if you never filed, the IRS already knows that there is something going on because the banks report to the Internal Revenue Service if you have any cash transactions that seem suspicious. And 10,000 is not the limit. Yes, legally it is, but there are ways to combine it to be more than 10,000, 10,000 or more, and a report goes, or the banker doesn't like you, and you bring this cash direct to the IRS. I was there for many years in the fraud department, and I can tell you that there's a lot of ways for the IRS to find out what is going on with taxpayers' finance. What else? What causes returns for audit? Failing to, right now with this crypto coin or currency, the Internal Revenue Service is so high into finding out if you have invested in or have any of your funds in digital currency. And I think Jeff is going to elaborate more on that. But if you fail to mark on the tax return that you do have digital currency investments, the IRS is going to put a light bulb, something going until they have the time to pick up your case, especially if it's substantial. What else? There are transactions like the 1099 case where they are reporting digital transactions. And here I have a horror story for you guys. A taxpayer had invested I just give you the quick example. Invested 100,000, and in 3 months he had $1 million gain. I'm not gonna explain the whole tax on this. So in 2020, he had to report the gain, and he left everything there, the 100,000 and the $1 million gain, so $1,100,000. And then in 2020, he lost everything, but he owes taxes to the Internal Revenue Service now for that gain, and he cannot take that loss because this cryptocurrency, there are some exemptions, but generally speaking, cryptocurrencies are considered property. So when you have these transactions, they usually are termed capital gains and losses. So be careful with that. Next.
Yeah, and to dovetail off of that, so this has become huge area of focus, not just for taxing authorities, but also for taxpayers, like all of ourselves, is how do we address the nuances of digital assets? I mean, they're property, but at the same time, they could be taxed as capital gains or income, depending on the circumstances. You know, was it mined? Was it staked? You get, someone gets a random 1099 and they don't have access to those coins anymore. Like, how do they navigate all that? And the reality is, like, it's a very complicated area, right? If someone is just buying 0.01 Bitcoins and sitting on it for a couple of years, there's no tax to report, right? There's really very little complexity. But for those of us that we know that engage in high levels of trading or decentralized activities, staking, validating, whatnot, it gets very, very messy. Most of the things that happen in the crypto space are taxable events. Back in 2017, 2018, when it first started kind of coming on the radar in mainstream media, that there's a misconception that you only have to, it's only a taxable event. You only have to report what you actually cash out. Right? You could do whatever you want on Coinbase or Binance or one of these other crypto ecosystems, but it's only taxable if you actually transfer the money into your bank account. Is a huge misconception and absolutely and utterly wrong, because crypto is property. It is not subject to 1031 exchanges. It is not subject to cashing out for it to be taxable. In fact, it was a very painful and educational surprise for folks that were engaging in high-level trading, because every single time they traded a Bitcoin for Ethereum or Ethereum for Solana or whatever else, those were all taxable events. So whether there's a $5 gain or loss or a $50,000 gain or loss on every single transaction, all of those have to be reported. All of them have to be paid up if there is taxes owed, whether money was cashed out to the bank or not. With this is back in 2019. So kind of backtracking to something Alice indicated about how does the IRS know about some of these things? Well, once the crypto space started garnering a lot more scrutiny from taxing authorities and regulatory bodies, the IRS, for instance, started issuing form letters. There are 6173s, and there's 3 versions of them, to individuals that they knew or suspected of having some sort of cryptocurrency holdings. And it's pretty much putting a lot of digital asset holders or traders on notice that, hey, we're on to what's going on. We may not understand how much is owed. We may not understand exactly how you're generating money in the crypto space, but just be warned that you need to report everything. And if you owe a tax, you need to pay the tax, plain and simple. And they also get this information from the likes of subpoenas, right? Just like they could go to a credit card company or a banking institution, they could also go to platforms like Coinbase and subpoena for records of individuals to see their transaction history, to see how much they have invested or earned in terms of gains and losses, right? Now, because it is still a very messy space, there's been a lot of softwares popping up over the last several years that are presumably positioned to help taxpayers figure out what they owe and as it relates to their cryptocurrency activity. The likes of Coinleys, Bitcoin.tax, Token Tax, what have you. There's a lot of them out there. And the issues with a lot of the softwares is they tend to report gains because they don't follow all the transactions from wallet to wallet. It's area that could be a presentation in and of itself. I won't go into the details, but just be mindful that a lot of the softwares that claim to be able to do these calculations for somebody are actually reporting things incorrectly, unless someone has a very, very simple transaction history, right? They're trading Bitcoin for Ethereum 100 times on one exchange. Once they start doing DeFi stuff and staking and validating and all this other stuff and transferring between wallets, those softwares can't be fully relied upon, right? But in some ways, from the IRS or taxing authority perspective, it doesn't matter because it's the taxpayer's responsibility to ensure that they're reporting correctly. And that's why it's very important to confer with professionals on this. And we'll reiterate that point at the end of this presentation. Thank you, Alice.
So before I get into this slide here, I want to also say that cryptocurrency and all these transactions are not regulated. So you are at your mercy if you start putting money there without, like Jeff says, really knowing what's going on, and relying on somebody else's report is not going to do it. So be careful. So the Internal Revenue Service, other than the computerized way of speeding out these tax returns for audit, they also have local compliance projects. When I was there, they were actually going after churches, believe it or not. And so the IRS got in trouble for that. And I'm going to get into the politics of it, but that's how they do things. The Internal Revenue Service come up with local compliances. Let's say they identify a tax preparer in I don't know, in Los Angeles. Los Angeles big enough so that it's general kind of idea here who they go after. So the tax preparer is putting an issue at Schedule C, let's say, and it looks suspicious on every return that they file, except for a few. So the IRS would pick up that tax preparer to see what the heck is going on, or earned income credit. So there are actually local compliance projects that go to the local offices to see what is going on. They had recently in San Mateo a project for taxpayers not paying their tax or remitting the payroll tax from employees. I don't know where that is right now, but few of my clients got picked up for audit. And unfortunately, one of my clients, one of them that was not paying, remitting those taxes to the Social Security and to the IRS, the income tax. So taxes, as you know, is different: income tax, Social Security, Medicare, state tax, and so on and so on. But the employers think that they can just take those monies belonging to the employees and just continue running their business and not remit those. That's illegal. It used to be that the IRS would just go for the tax, and sometimes they go for the double tax. If the employer owes $100,000, the IRS would say you owe $200,000. That is called a trust recovery fund type of tax. So it's very, 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 very high penalty for not remitting. But now they are going after fraud if the tax meets the threshold, which is $10,000. That is nothing. So please, any employers in this room, be careful with that. They also select specific market segments. And guys, I'll give you this. Some of you probably already know. There is called the Industry Auditing Guide Techniques. So they are available at the IRS. So if you're at a restaurant, I had a fisherman. I did not know really how to handle a fisherman. I went to the IRS webpage, an audit technique. I found how to defend this guy. So the audit techniques, some of them are outdated, but they're pretty good. If you want to know anything about your business, whether it's law, accounting, restaurants, mechanic, they'll have some of this at the IRS webpage. Okay. So the worst thing that you can get as a selection for an audit is, well, it's total compliance audit. Who's supposed to? I think at the FBI Comey, I think was the FBI guy that got the total compliance audit, meaning that the Internal Revenue Service would review every little thing on that return. Your name, your dependents, your Social Security, when you were born, Every little thing on that return, every line is audited. Usually there's 2 or 3 items to be audited, but when you have a total compliance audit, and they want those audits to go fast, so you better be ready for that audit, because the IRS want to collect all this data to see where the abuses in taxations reside. So that's the worst audit anybody can dream of. If you're dreaming to be audited, you don't want that type of audit. It's really horrible. Even for me as a practitioner. Jeff, have you had any this type of total compliance audit?
Thankfully, none of our clients have had that. But again, like,
Okay, knock on wood.
yeah, knock on wood. But again, the best defiance, regardless of what kind of audit, is just report everything accurately and have supporting documentation for everything. If those 2 things are happening, then audits are not scary at all. I mean, yeah, it could be tedious, the back and forth, possibly meeting with the auditor and whatnot, but they're not scary at all.
Yeah, they're scary for me because I can, do other things with other clients, things that are pressing. Instead, they saying, "Oh, how old is your child? Show me the social security, blah blah." So in that sense, it's but for the taxpayer, it costs money too. Anyway, Jeff did talk about filing your tax return by April 15. Here, what we're talking about filing a Form 4868, this extend the time for individuals. We're not going to get into the other type of entities, but for individuals, Form 1040, Form 4868 extend the time to October 15, or if it falls on a weekend, then the next business day or a holiday. And Jeff did mention as well that getting an extension to file doesn't give you time to pay your taxes. So if you owe taxes, you must pay the taxes by the due date of the return. Otherwise, guys, and this is something that a lot of taxpayers do not know, if you don't pay the taxes, your 4868 will not be valid. So any penalties for filing, for not paying, is going to be assessed because you didn't pay the taxes by the due date. And filing this statute increases the statute to three more years, or to October 15, 6 more months. And if you owe a lot of taxes, it's going to extend to 6 years. And that's if the IRS is thinking you committed some type of fraud. Okay. So the IRS would select what type of audit what type of return to audit, and that can be a small type of audits, an individual 1040 or a business. It can be medium or large. It can be a partnership. It could be just an individual with a Schedule C. But all of these selections have their place. A small business or even medium are given to Internal Revenue agents that work for what they used to call self-employment, small business. And then it went to large business, and the names change, but what doesn't change is the amount of tax and assets that these entities have. So if a tax return is filed with $1 million, more than likely it's going to be given to the small business section of the IRS. But if there are more than 10 million, depending what the industry is, then it's going to be given to another function. Still auditors, and they all have been trained the same way. And I want to tell you guys, I know that out there, when I was growing up, I was told the Internal Revenue agents or the Internal Revenue Service employees do not know what they are doing. Maybe the lazy ones, the ones that never pay attention to the classes, but the Internal Revenue Service gives just excellent training. So I am prodigy. I am one of them that I feel that I was trained very well. And so please don't rely on that, oh, they don't know what they're doing, so I can get away with it. No. So selection for audit, I don't know what time it is now, 4:45.
Yeah,
Yeah.
actually, on this slide, Allison, I think we could relate to something that's relatively current in the industries right now, and that's think of the increased attention on AI platforms, right? Whether it be Bard or Chat GPT. So IRS, unsurprisingly, leverages some systems and machine learning and their own pseudo AI in a way to help identify returns that should be further scrutinized, right? And here it's referencing their systems, the diff or UIDID, and helps identify things that seem amiss. You know, for example, if someone has a sole proprietorship, right, so they have a Schedule C filing, and they're doing something on the side. Let's say they're a graphic artist, and underneath their professional fees, they said that they paid $5,000. Marketing, advertising, they paid $2,000. Office supplies, $1,000. Then the next year, they do the exact same thing. The systems that the IRS has set up was going to flag these things that are obviously suspicious, right? Using rounded numbers and using the same numbers back-to-back years. Right? So to help save time for examiners in the IRS, they leverage computer systems, again, conceptually similar to like what Chat GPT and Bard and other systems are doing, to identify things that should be followed up on a little bit more in a little bit more detail.
True.
Let's talk a little bit about the audit process. Alice?
Yeah. So basically, Jeff did explain this already, but the diff score is the one that everybody, I would, if I ask you guys in this room, how many of you know about the diff score? Again, this is selected and is calculated by software, and is supposedly is kept a secret. But it's basically what Jeff just said. If there are any suspicious or major changes, the computer will score this return. Yes, look at it, or it is okay. Usually, the individuals, I think, especially lately, you've been hearing that the IRS is going to go after you for everything you own, and it's going to go to the smaller individual and blah, blah, blah. Probably potentially is true. And in the past, the easiest people to audit were the individual tax returns in the small business. And it looked like the IRS was auditing just in the small people, little people, Leona Hemsley called us, you know. But no, the Internal Revenue Service has a plan every year. They come up with a plan and they decide how many tax returns are going to be audited for each entity. So I would not, that's all politics out there, so I would not pay attention to that, guys.
Okay. I agree. Right. And they also, with in terms of identifying what's going to be audited, as we show here, also fraud referrals, right? So if someone reports someone else to the IRS, like they're evading taxes, and if there's justification behind it, not just, hey, I want to get somebody in trouble, that could be a flag for them to be a little more scrutiny on the reported individual or entity. Also related audits, right? Let's say somebody has 20 companies and 2 of their companies are undergoing audit. Well, because there's, especially if there's a lot of due froms from one entity to the next, and they're just the commingling nature or close relationship between the companies and the owner, there's a better chance that some of those other entities and or the owner might be selected for an audit too.
Yes, so the thing to know is that it depends how small, medium, or large the tax return is, and where the function that is going to take over this audit. The smaller returns go to office, meaning that you're going to be called to come into an office. And I will not say that those guys do not know how to do the audit. They too are well trained, but they do not have the expertise that somebody like me, let's say Internal Revenue Service with an accounting degree, studying for the CP and all that, that kind of knowledge is more for the revenue agent, and that is a field audit. Now, the field audit can be for small, medium, and large, depending on which function the internal revenue agent is placed. So again, letters will go out to the taxpayer, whether it's a business or small, medium, and large. With large, there's a little bit of an agreement with the Internal Revenue Service. We're running out of time, but if you have any questions, please contact me or Jeff.
Now we'll skip ahead to the appeal process.
So if the taxpayer does not agree to the, and this one we're gonna go very quickly because this is very, 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 what is the word I wanna use? It's exhausting. If the taxpayer doesn't agree, and there are reasons for not agreeing to an audit, first the taxpayer can talk to the manager of that revenue agent, the auditor. The manager usually stands with the revenue agent, and I was a manager and I know how that happens. Then it goes to a section called 90-day letter, where they're gonna issue a letter saying now you can appeal or go to court. I suggest to my clients, I'm not saying you guys do this, to please try to settle at appeals level. And because by the time you leave the tax return audit leaves the revenue agent, it's almost a done deal that you're gonna have to hassle to get the tax lower or reduced totally, you know, or no change or whatever. But you don't really want to get into a fight unless you have a good tax attorney and the issue is solid. Otherwise, appeals will do the job. But again, it's time consuming. What I want everybody here to know, in case we don't have any more time to continue this, you know, don't think that when an audit takes place that things should resolve like in 20 days or something. Sometimes it takes years, guys, depending on what the issue is.
And even if you win on the appeal, even if you win an audit, a refund could also take years.
That's correct.
We defended a crypto client of ours in an audit. It lasted for a good 8 months or so. And they finally came back with no change. They agreed with everything we reported for the client, but it took 1.5 years for him to get a refund. So
keep good records. If you have good records, good bank statements, don't throw them away for 3 years. This is outside the work here, but yes. Next one. That's your slide.
Yeah, so assume we've kind of avoided an audit altogether. Just a general takeaway on in preparing your own taxes, know that there's some things you could do to help like mitigate your tax bill. And this question comes up all the time. Hey, I want to pay less tax. In fact, one of my favorite things to hear from prospective clients, because I hear on almost every single call with every prospective client, well, maybe like 9 out of 10, is they'd say, listen, Jeff, I understand I need to be compliant, but I just want to pay as little as I can. How can I mitigate my tax bill? And I laugh internally about that because I've never had anyone tell me the converse. Even me personally, I'm not like, hey, how do I maximize my tax obligation? Who has that perspective? I don't know anyone. But yeah, it's funny that everyone comes out the door in talking and interviewing a CPA with that notion, like that's something that has to be said. Otherwise, the accountant might presume that they want to pay a lot of tax, I guess. But listen, there's things that you could do to mitigate the tax. There's not a lot that needs to be done. Usually, whatever is owed is going to be owed. If you have a business, that opens up the door for a few more things. As an individual, it's usually just going to be kind of the low-hanging fruit that occurs every year, right? Maximize your contributions to your 401k, to your IRA. Make the donations before December 31st each year. If you have a business, right, that does open the door for a few other things, but for most individuals, it's going to be those few. And the last thing we're going to touch on is with all this. I know it's a lot of information, and from that roadmap we showed at the very beginning, it's a very complicated space, right? And you could spend days, years, decades devoted to trying understanding and navigating effectively the tax code and the tax process, but most of us are not here to become tax professionals. That's not where we want to spend our time. It doesn't make sense to spend our time there. You know, for fellow business owners, it doesn't make sense to devote your attention to just how to mitigate your tax if you're trying to run your own business. You outsource this expertise to the professionals like Alice and myself. Right? And working with a licensed professional, it could save you time, right? We can help you navigate more complex situations, identify opportunities for mitigating tax exposure, not just the low-hanging fruit things, but some of the more sophisticated mechanisms, right? Opportunity zones, 1031s, et cetera. We can help mitigate your risk for an audit, because it's not just about saving on tax, it's also about lowering your exposure to audit risk, right, or examination. And also the fees you pay a professional if you have a business, right, those are all deductible. Right? So it's another little tax benefit. And we can also help kind of plan throughout the year, as well as at year end. You know, say at the end of 2023, what can we do before the end of the year to save a little bit more on tax? And also, what can we do now to start setting you up on the best path for the next calendar year, for the next tax year? And with that, we want to thank you for your time. And if there's any other questions, please feel free to ask. And if you don't want to ask now, you want to ask privately, you can reach out to either of us directly.
Any questions?
Yes, that's what I would like to ask. If there are any questions, we still have 4 minutes left, ladies and gentlemen. So whoever has any questions, please ask now or forever hold your peace.
I just sent the link for that roadmap in case anyone wanted to pull that up or save it for yourselves, or just curious.
Great.
I have a question about fees. Like, like I know different, like when you're getting your taxes done, you know, the fees are different per that person that's doing your taxes. What's feasible, I guess, like depending on the taxes that you're doing.
The fact that you're asking that question, thank you, is evidence of the commoditization of accounting services, and it's been that way for some time now. The short answer is, listen, if your taxes are not complicated and you're not self-employed, you know, anywhere from $0 if you do it completely yourself to maybe a few $100s if you use something like a H&R Block or an online equivalent, right? And using a licensed CPA, automatically you're going to spend probably double at least, right? Just because there's a little bit more involved, and you're also transferring some of the risk. You know, the risk of missing something. Well, chances are a licensed person's going to pick that up, and also saving yourself a little bit of time. Once your taxes become a little bit more complicated, that fee could grow exponentially. I mean, case in point, we have well over 1,000 clients. On one end, on the low end, we have some folks that have like one W-2, don't itemize, super simple taxes, and we charge them our minimum fee of $750, because that's just what our minimum is. And on the complete other end of the spectrum, we've had entities that file in literally all 50 states, have foreign ownership, tons of complexity, and their fees could be tens and tens of thousands of dollars, and then some. Right? To get a meaningful quote, the best thing to do is just ask. You know, shop around and talk to a few people. I would avoid comparing and contrasting to colleagues or places on like Reddit, because a tax fee is somewhat very tailored and personal endeavor. Yeah, everyone's tax situation is vastly different, or can be vastly different, and therefore the fees aren't really comparable.
Thank you so much.
Mm-hmm.
We have 1 more minute, one last question. If not, we will have to adjourn, but I just wanted to give one more person an opportunity. No other questions? Then I would like to thank Jeff and Alice for a wonderful presentation, very enlightening. I've learned a couple of things that I had no idea about, so I have to approach my tax expert, which is Jeff, about some things. So thank you all very much for this wonderful presentation, this enlightening presentation, great thought leadership ideas. So thanks so much, and thanks to everybody who attended. This was wonderful, and we appreciate your input and the time that you donated to this effort. Thank you very much, and all have a wonderful night.
Thank you, everyone.
Thank you.